What's up, guys? Welcome to my first live YouTube video streaming. So today I'm gonna talk about this sales and trading interview. I'm preparing for my tomorrow's Citibank summer internship interview, sales and trading. So some of the what to expect from the technical questions. Okay, I'm just reading off this site from Sell Site Handbook. What are some of the technical questions that I can expect? Okay, so the first question is um, on equity markets interview question. I'm reading off from my another screen right now. It's plugged into my monitor. Okay, so first question expected from. So basically from this site is saying that we should have a good grasp of accounting for derivatives, when derivatives are used, and what drives asset prices to make a good impression during the interview. Okay, so first question, equity markets interview question. What are dividends? So there are two types of dividends. One is for common shareholders and one is for preferred shareholders. So whereby they can receive dividends. Generally, dividends are periodic cash payments, so dispersed to the shareholders. And as what I mentioned, there are two types of shareholders. First is preferred shareholders, second is common shareholders. Okay, so however, there's a hierarchy. So preferred shareholders will be paid first in terms of their dividends, then followed by common shareholders. Okay, so now we know about dividends. Next, what are stock splits? Stock splits, let me take a look. So actually, one example of a stock split I can give out right now is, I think the past 2 months or so, Tesla and Apple actually announced for a stock split, and I was actually involved in one of the company stock split. Tesla actually split 1 to 5, right? One share to 5 shares. So the thing about stock split is that your your company's uh, your company's valuation doesn't change. It's just the number of shares that has been increased, right? So you can take it like you have a banana, okay, or let's say you have this pen, okay, and you split it like, let's say you split it into half. The total length of this pen will still be the same, right? So it's the similar concept. Stock split basically just means it enhance the liquidity of the business stocks and shares, right, to retail investors. So because initially the share price of uh, Tesla went up to like maybe 1,008. Their all-time high was around $1,800. So a stock split to right now the current split price is around 450. A stock split to 450 will psychologically mean that uh, retail investors can afford like a per share basis. So a stock split is to basically increase liquidity. So number one, increase liquidity to retail investors. But bear in mind that the valuation of the business doesn't change. Yeah. So it's basically repeating what I've just said. So basically, sometimes when you have a stock split, it can actually drive up the prices because investors psychologically thinks that, I own 1 share now become 5 shares, but logically speaking, is you still paid the same price for that for you still pay the same price, right? 1 share you paid $1,500. You get 5 shares, you paid $300, right? So basically it's still the same. 5 shares, 5 times $300, 1,500 one share. Okay, basically it's the same. But it's just more. So basically, to sum it up, when you are being asked about what are stock splits, just say that a company divide its shares, one share to become 5 shares. So there's an increase in number of shares. Let me just check this. Okay, got it. Okay, so what are stock splits, right? When you're talking about this, right? This is how you position it. Okay. Firstly, you say that stock split just means that the company is increasing the number of shares, and also the share price will actually be divided equally based on the number of shares. Okay. But bear in mind the total market capitalization still remain the same, because remember I said you have one share with that's cost 1,005. One times 1,005 gives you a company valuation of 1,005. Now they split to 5 shares, and then 5 shares selling at $300. You still have 1,005 in terms of market capitalization. Okay, so there's no change. Second thing you need to second thing you need to take note is uh, why companies do stock split. So companies do stock split because they want to increase liquidity. Okay, they want to increase liquidity to make the share price seem more affordable to retail investors. Okay. All right. Next, what is a stock buyback or share repurchase? Okay. So for this question, stock buyback is basically means convention intuitively it just means the company, right, is buying back their own shares. Okay, buy in the secondary market. So you can see them as let me just take a verify that already. Okay, stock buyback it just means the company is buying back its own shares. So they're actually reinvesting their excess cash into their own company. Okay. Okay, next question. So basically it just means it's another way for a company to return money to shareholders. Stock buyback, or we can call it, or through dividends, it's always to give back money to shareholders. Okay, tell me about stock in your portfolio. So this is about pitching a stock, why you invested the stock at the time you did. If you're a trader, be prepared to outline the factors that drive your trading decision. Short-term investment decisions are generally more appropriate for a trading interview. and will focus on macro trends and themes. Oh, okay. So I think for this question, we need to talk about a stock that is quite relevant to macros. Wow, this one. So basically, for pitching our stock, we need to remember to always link it back to markets. Right? So markets always what stock I will buy, what stock I will sell. Okay, so basically what I think I would say, right? What the stock I will sell is I will sell stocks that are more cyclical industry. So for example, Restoration Hardware is a furnishing luxurious furnishing hardware luxurious furnishing company, right? That is very dependent on its stores. And right now during COVID, and the uncertainty, we don't really know whether sales will pick up, whether consumer confidence will pick up. And then S&P right now is currently generally fairly priced at 23 PE ratio as compared to like past recession, right? In 2008, 09, it's around 110, dot-com bubbles around 32. So I would say that it's fairly value right now in the average range. But to be more conservative, I think I will sell companies that are more cyclical industry. Well, what are the companies that I will buy? I'll buy companies that are more tech driven. S&P right now is, I think the most of its valuation or its price is actually driven by tech companies. Okay, what is the tech bubble burst? We can talk about bubbles. Of course, when investor confidence pushes the price of the securities beyond the fundamental value, tech bubble is no different. The term irrational exuberance was coined by Fed chairman to describe this phenomenon. Very good. The question is, are we at a bubble level? I don't really think so. The sentiment behind this bubble was that the growth of companies with an online presence or news population will be astronomical, but a realization that the nominal valuation will still apply, and that many of these companies had no feasible timeline to profit. It's also in markets like inclusive literature suggests that okay. If you have 1 million to invest, this is quite common. How would you invest it? Describing your risk tolerance, okay, based on the current market condition, allocate a set based on Okay, I guess it's always linking back to market. So let's take a market right now. let me just read a short snippet of the markets. Okay, updated today. S&P drifted between gains and losses. Okay. Treasury yields extended their climb. Yield on 10-year note reaching its highest level since June. Okay. 10-year yield is now 0.801%. Okay, so basically what you need to know about the bonds and the stocks, right, is that when bond price increase, right, basically it means that there's a sort of a bad economic indicator, right? Because when investors are fearful of the equities market, they actually move their money to bonds market to look for safety, right? So in response to that, your bonds market, the price of your bond will actually increase, and your yield will actually decrease, right? But now we see that the 10-year yield actually is 0.8% around there. Increasing just means that there might be a flight to safety. Okay, so I do see that in the current period, maybe there might be a decrease in price of your bonds. Okay? So they are actually quite focused on the stimulus package, COVID stimulus package. So there wasn't a deal before the election day. So it's saying that a pre-election stimulus package deal is very unlikely. So right now, investors, there might be a short. I might see a short downturn in the markets because investors are actually gauging, right, because right now it's the earnings period, gauging how businesses are actually weathering through the economic downturn. So there's actually when recovery of corporate profits. Wow, that actually jumped to 9%. Oh, oh my god, this was that actually made a lot of money. Oh, that jumped like 10%. So I think like the stimulus package is really the support level of the market right now. It seems like it because having more stimulus just means consumer sentiment should go up and stuff like that. And we'll see how it plays out. Okay, let's get back to our question. Okay, so if I have $1 million, what will I invest in? So we can see that what Snap has been increasing, work from home right now. I think I'll invest in companies that are fundamentally more innovative, more disruptive than a more than companies that is more heavily reliant on capex and physical retail stores. Right. Okay. Now, capital markets is a good question. This is interesting. So, what is the difference between primary and secondary market? Okay, right now it's almost 2 a.m. I think I'm going to sleep, but I'll just finish quickly finishes. So, primary markets is actually through IPO, right? Secondary markets are traded by institutions and investors in individuals. Okay, just basically just means primary is just IPO. Okay, what is a repo? Repo is a repurchase agreement. Okay, so maybe if I got USD right now, I'll just sell it in the open market and then I will agree to buy it back at a predetermined price. Okay, basically to increase the liquidity. So what's the reverse repo? I think repo, I don't know what's the buyer, what's the seller. Let's say I'm the seller, means I own that security itself, right? And then the buyer, the seller is the lender, buyer is the broker of money. Okay. Reverse repo is a transaction where the buyer of the security reaches an agreement to sell security back to the seller. Reverse repo just means the buyer will sell back. Okay. Okay, interest rate of US increase. How will this increase the USD CAD exchange rate? US dollar will strengthen. So your interest rate increase, your domestic currency increase. Why though? Okay, so basically when your interest rate increase, right, your domestic currency will increase because it will mean more attractive in terms of the interest rate for investors to actually come into invest. Okay. Should company issue debt or equity? I say issue debt because debt is relatively cheap right now. Okay, given your interest expense tax deductible. Let's look at commodities. Oil recovery expected to filter through though supply blood streams. Global oil supply actually is falling right now. 4 million barrels less in the fourth quarter of this year. Crude futures prices. Crude futures prices is so we don't actually see a strong oil demand growth. So slashing its forecast by 200,000 barrels a day. So they don't actually see this market. Okay. Okay. So what's next? Okay. So oil prices, supply, slashing supply by 200,000. Oil prices is remaining weak. Okay, stock market is kind of steady right now. What is the current state of interest rate? 0.8%. Global interest rate available. Oh my god. What is this one? What's the current news for the rates will still remain around 0 to 0.25%. Okay. Room or Okay, 0.25%. What's the objective of the Fed? Open market operation, buying bonds, changing overnight rate, changing reserve requirements. Okay. What is the difference between currency depreciation and devaluation? Depreciation occurs flexible exchange rate system. Seniority of the debt. We have the senior debt. Senior secured debt. Bank revolvers, bank debts, certain bonds, high yield bonds, unsecured creditors, mezzanine debt. What is a QE? QE is actually to depress your interest rates, right? It is achieved through the purchase of securities from the markets, buying bonds. Oh god, I'm so tired. Oh my god. Okay, so you have a senior secured debt, and then you have your bank revolvers, right? Bank revolvers, bonds, term loans. Term loan just basically mean like a 10-year loan. Bank revolvers, high yield bonds. Then you have your subordinated debt, then you have mezzanine debt, convertible bonds. Mezzanine debt, you have convertible bonds, convertible preferred, What is quantitative easing? Quantitative easing just means your Fed is trying to reduce your interest rate by actually going to open market purchase of the bonds, right? So price increase when it does your open market purchase, your cash actually increase, right? Monetary supply will actually increase, so it gives them more incentive to lending. Non-farm payroll is one of the most important days. We don't remember because all jobs excluding farm workers, supervisor, private household workers, and utility workers. Non-farm payroll, excluding payroll. Company should buy back stocks that they believe that its stocks is undervalued. Dividend paid are taxable to individuals. Yeah. Dividend paid is not taxable for business because it comes off after your income after tax. Okay. What will investors prefer stock over common stock? Okay. Preferred stock, okay, retains the upside potential of equity, not providing a fixed income like dividend payment. Okay. It's a fixed income, fixed coupon like payment. It's just such like a debt. Okay. So when we talk about preferred stock and common stock, we always talk about risk and risk. What is the risk? Okay. So preferred stock generally have lower risk because it's more senior than your common stocks holder, right? Okay. In terms of, and then you have received a regular fixed income payment. Why would company distribute to via dividends? Because it's to show that the company is in a healthy state of financials. It's like a cash cow basically. Without form. What could the price of company stock increase when it announce decreased quarterly earnings? Decreased quarterly earnings, it might actually reduce your investor confidence, it might actually reduce the price. It can also increase the price if decreased quarterly earnings are still beat estimates, right? Fund X, it depends, right? Depends on benchmark returns. It doesn't matter. So, because of the sentiment, right? Always want to see. Fixed income question. What is par value? Par value is what you will receive after what you will be paid back. The principal. What you will be paid back of the bond for the bond holder. One of coupon payments. Coupon payment just means a fixed periodic interest payment that bond issuer bond holder will get. Home price is based on the current market. Uh, Basically, it's adjusted. It's the present value of the bond, such that you are actually taking the price of the bond. You actually take the bond price, bond payment price of. So actually, it depends on your interest rate as well, right? Because it's discounted based on the yield to maturity. Okay, what is default readjustments? Going backward. What is default payment? Default payment basically just means the compensation rate of your rates. Maybe you have a discounted bond because it's more risky, right? These are Ginnie Mae, Fannie Mae, bonds issued by the Fed government to support spending. Movies are your state government bond. Corporate bonds issued by corporates. Investment grade high yield bond price. Discounting your future cash flow expected from the bond by your yield to maturity of the bond. Higher claim and more fixed payment. Duration is the sensitivity of bond price to change in interest rate. Higher duration, more sensitive. So basically, duration just means your sensitivity of your bond price to sensitivity of bond price to change in interest rate. Okay. Convexity is the measure of bond duration to change in interest rate. Let's take a look at the yield curve now. Remember this yield curve right now is generally flat to steep. Okay. Relationship between your yield and your maturity. Really, the viewpoint is quite hard here. I mean, it shows a pretty gentle to steep. So it shows the relationship between your uh, maturity and your youth. If I believe that interest rate is about to rise, my youth and maturity will increase, price of my bond will fall because my discount rate will increase. I read off the percentage. Okay guys, we are going to come to an end. Okay, let me just sum a few things up. The maturity just means that inflation hurt creditors in a way uh, because you just reduce the purchasing power of the money. So basically, the more you get back in the future, you actually know. If I believe the interest rate will fall, means my value of my bond will increase. I'll buy bond. Hmm. 10%, 10-year coupon bond, or 10-year zero. Hmm. So there are two things: longer maturity, more price sensitive; uh, higher coupon, less price sensitive to your change in interest rate. Coupon, corporate bond, two things, right? First is your interest rate and your credit risk. How would I value? Just think about it a little bit. Third means your yield goes up, right? Short-term bond yield will go up, so your price of the bond will actually decrease, so you sell. Yeah, bye guys. Good night.